Hello everybody, welcome again to our lectures on accounting. Today we are looking at the reducing value methods of depreciation. Okay, so as we use assets in the business, they reduce their value. So we also need to account for that in our books of accounting. We have got two main methods of depreciation. The first one, straight line method, and the second one is the reducing value method. We might also as well use other methods of depreciation, but these are the main ones, the reducing value and the straight line method. Now let's look at this example and try to work out on how the reducing value method works. Okay, we've got a statement on our board. A vehicle worth $12,000 is depreciated at 20% using the straight line, using the reducing value method. Okay, so the question says calculate depreciation for year 1, year 2, year 3 using the reducing value method. Okay, so what we need to do for now, we need to get our calculators and try to see how does the reducing value method works. Okay, so the first item here is we have to calculate 20% for the first year and try to see how much goes into depreciation. Okay, so for the first year, year 1, depreciation is debited with 2,400. So our motor vehicle in the first year, it reduces with 2,400. So where does the reducing value method differs with the straight line? It differs from the second year. Let's look at what happens in the second year. So what we have initially, our motor vehicle had an initial value of 12,000. So if we reduce 12,000 minus the first year depreciation of 2,400, we are left with 9,600. So when we use the reducing value method, we actually charge depreciation on the amount, on the residual value of the asset, whether it's a motor vehicle or immovable property or any other form of a fixed asset. So now we are using our figure of 9,600. Let's try to calculate depreciation for the second year. Now depreciation for the second year, it will be 10%, it will be 20% of 9,600, which is 960 by 2. Let me just try to get a calculator. Okay. 1,920 So if you look at this, the depreciation on the first year was actually much higher than the depreciation of the second year. Let's look and try to see what happens on year 3. On year 3, now we take the total of accumulated depreciation, which is 2,400 plus 1,920, and deduct it from the initial 12,000 to get the residual value Okay, so the total of our accumulated depreciation 1920 plus 2400 becomes 4320. So we now deduct 4320 from 12,000. And from there, we get 7,680. And that becomes our new residual value. For year 3 now, we are now charging 20% of the residual value. So now our year 3 depreciation will be $1,536. So if you look at the accumulated depreciation, it's actually increasing, but the depreciation for the year, the annual depreciation being charged on the motor vehicle is actually reducing. So it was high on the first year, it reduced on the second year, further reduced to the third year. Now let's look at year 4. Now on the year 4, we have to take the total of our accumulated depreciation again, which is the total of 2,400. This one added to 1,920. This one added to 1,536. This one to get a total of accumulated depreciation of 5,856. 5,856. Now we reduce that from our initial value of the motor vehicle, which was 12,000, to get the new residual value for our motor vehicle. So if we deduct that, if we deduct 5,856 from 12,000, we get 6,144. And this is where we charge our depreciation for the year 4. So now we are saying depreciation is 20%. So 20% of 6,144. 20% of 6,144 will be 1,228. Now we have seen how depreciation is calculated using the reducing value method. Now we've gone from year 1 to year 4. Now we need to check what will happen in year 5. Usually motor vehicles are depreciated over 5 years. Their lifespan is regarded to be 5 years. And let's see what will happen to year 5 depreciation using the reducing value method. Okay, now let's just take our figures. Our total accumulated depreciation for year 4 at year 4 will be 5,856. This 5,856 plus 1,228. 5,856 plus 1,228. Our total accumulated depreciation will be 7,084. Now let's try to look what will happen in year 5, which is the final year of the motor vehicle. Which is the final year of the motor vehicle. We just wrap this for now. Now, if you are using the reducing value method and you are told that the lifespan of the motor vehicle is 5 years and you are on the 5th year, you will not use the same method that you were using from year 1, year 2, year 3 and year 4. What happens on the 5th year or on the final year is that you take the initial amount of 12,000 and deduct the accumulated depreciation of 7,084, and the remaining amount will be your depreciation. In this year, we are saying the motor vehicle should be depreciated to the value of 0, and there should be nothing left on the board for depreciation. Because in the next year, on year 6, we are saying the motor vehicle will be having a value of 0. So let's try to see how much we get. 12,000 against 7,084, we get 4,916. Okay, so that is the final year. Year 5, accumulated depreciation and depreciation. Depreciation 4,916, accumulated depreciation again 4,916. So this is it, the reducing value method. So you have seen that the reducing value method, it actually puts so much depreciation at the first year. It assumes that the vehicle depreciates at a higher value when it is new than it is on later years. From the second year, third year, the depreciation will be reducing as the vehicle ages. But at the end or the final year, the whole depreciation will be taken out, because you are assuming that the vehicle has a lifespan of 5 years. So that's the reducing value method for you. Let's meet again in the next lesson. Thank you so much.